There seems to be a lot of fear and uncertainty around the crypto market, and even just going out on the weekend and meeting a few friends, they all had that topic and asking the question around what happens next for Bitcoin, what happens in crypto, and why is there so much fear? Because we were promised we were going to go on this massive parabolic move. So in this video, I want to discuss my thoughts around what's happening in the market now and why I think 2022 is going to be much of the same. So if you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, if you are interested in more daily updates, like the one I made a few days ago when I said, hey, I'm actually selling 30% of my portfolio in crypto into stable coins. And the reason I did that was because I just felt like with the uncertainty, I just wanted to have a little bit more cash, a bit more cash reserves on hand in case the crypto market did tank a little bit more given what's been happening. So I'm going to discuss what that is, but if you are interested in staying up to date with what I'm doing and what my thoughts are, then definitely join the VIP Patreon group. That move alone may have actually paid for your entire year of being on Patreon. So a couple of things that I do really want to discuss is first and foremost is if you do go back a few months on my channel and you actually see that I'd kept thinking that the top for this market was not Q4 like many other YouTubers were talking about. I thought it was Q1 of 2022. So they were thinking Q4 2021, Bitcoin gets to 100K. I didn't think that after I had done my research and just looking at what was happening in the market, especially after the September drop. And so I thought, okay, Q1 makes a lot more sense. The cycles will extend. And given that we have such wide adoption, I think it just makes sense for us to go in Q1. Now we're in Q1, we're pretty much halfway through, if not more than halfway through, and it doesn't look likely. So I'm here to admit, yes, I got it wrong. And to be honest, nobody really knows. It's more so an educated guess. And when it comes to influencers, you definitely shouldn't be listening to us when it comes to what sort of financial advice you should be taking.
Because we don't give that out.
Now, I don't know about other channels, but I definitely pride myself on the logical approach I have to investing. Whether it's crypto, whether it's ETFs, whether it's Pokemon cards, or whether it's property. For me, it only works if the numbers make sense. Otherwise, I'm not here. And as I continue to navigate through this wild, turbulent time, I just know that I have to go back to my strategy, what my goals are long term. And if I really do believe in something, then I should have conviction behind that. Now, it's safe to say Q1, probably not going to happen. Does that mean it's Q2, Q3, or Q4? Well, nobody knows, including myself. But when I start talking about some of the things that are happening right now in the economy, you've got to ask yourself, when you see the next influencer or someone talking about how we're going to 10x or 100x over the next couple of months, you've got to really question, why are they saying that? Is it just for a few more views on YouTube? Possibly. But for me here, I just want to keep it quite logical. And if that's the sort of content you like, definitely subscribe and definitely smash the like button. Now, there is a lot of data to suggest that the cycles are extending. Every time we've had a cycle peak, it's always been extended by a few hundred days. And I really picked this up, a few months ago when Benjamin Cohen was actually talking about it. His channel is phenomenal. It's a lot of data and just a lot of trends on charts and things like that. So if you are interested in that sort of stuff, you should definitely go check him out. But for me, he takes up such a logical approach to the market. I like that. And so it keeps me grounded with what I think is going to happen, where I sort of position myself. And I use that as part of many other resources to make my decisions moving forward. And one of the things he's been discussing for years now is the cycles will extend. This 4-year cycle of you coming back every 4 years, making 10x your money, sell at the top, come back and repeat, just sort of sounded too easy. And as the market does mature and there is wider adoption, we definitely know that there's less volatility, but at the same time, it becomes very hard to know when things are going to peak, when things aren't. And that's why when it comes to crypto, I sort of approach it in the way that I can dynamic dollar cost average. I've got plenty of videos on this channel. I've got a dedicated playlist for cryptocurrency. So definitely go check that out. But for me, where I do my trading and buying of my crypto, I actually have a company account, my personal account, and my self-managed super fund all on CoinSpot. So definitely go check out the link in the description below. They actually have a feature where you can reoccur buy, sort of sits there, does its thing. And if you're emotional about the prices and you keep checking, this is something that can avoid that, because it basically goes and buys for you in the back end. You just input the details over 5 minutes, and I've got a detailed video here. I'll link it up here as well. So let's take a step back and realize what's happening in the economy and why there's so much uncertainty. Because if it was just crypto related, then you could understand, okay, there might be something here that I need to question in terms of my strategy, my timelines, and why I'm investing. But this is not felt just with crypto. We've seen the share market absolutely capitulate as well. And when I say capitulate, compare that to crypto, it feels like nothing. But when you're in such a long-term traditional market, you don't expect moves like 20 or 30% over just the space of a month or two. So that's what's been happening in the share market. You've had very smart people actually exit positions out of their own companies. So it makes you question what's actually happening behind closed doors. We've had a very red start to the share market. We've had a very red start to crypto as well. The one thing that hasn't really been affected yet is the property market. Now, I've got videos on this channel where I continue to share my thoughts around interest rates moving up and how that's going to affect the property market. So you can definitely check out some previous videos. But the main concerns I really have is the geopolitical issues. When you've got Russia and Ukraine, it's like at all-time high, that tension, and at any moment we could have a war. Now, my personal opinion,
I'm not some sort of strategist,
but I don't think there's actually going to be a war. I just think there's a bit of a flex. There might be some consolidation of power there, but I don't think we're going to have a full-blown war. However, it could very much turn that way. And if it does, that could be the black swan event, which will cause the market to crash. And that's why I'm having reserves on the side. For me right now, it makes more sense to have some in and some out versus having all in, which is basically how I was for the last sort of couple of years. When you top that with the increasing regulation, you've just had BlockFi actually getting fined $100 million. You've then had Nexo come out and say, well, we might have to come under scrutiny as well. We might not give interest out to US citizens. This might be a move that starts triggering across the world. Now, crypto is very hard to control. I think everyone realizes that, but there are things happening that are very concerning in Canada as well. So definitely go start doing your research around that if you are looking for answers as to
what's happening in the economy.
Because yes, I can give you a summary of my thoughts, but that's a summary of me looking at countless hours of articles, as well as what's happening on the news, and formulating my own thoughts around it. So geopolitical issues, increasing regulation, and now you've had Biden's government come out and say they're going to give out an executive order when it comes to crypto. What does that mean?
Nobody freaking knows.
Now, this is all on top of the fact that we have fear and uncertainty around interest rates going up. Now, in a normal circumstance, right, if you've got inflation going up, that means your currency is dying. When your currency is dying, what you want to be doing is going and investing into productive assets. Now, if logic plays out, that should mean the assets should be pumping. So that means crypto, shares, property should be pumping, but it's not. In fact, we're going the opposite way. That is because people fear that if we have inflation so high, interest rates will go up. And if interest rates go up, that means people will default on the debt they took out because we're at record level debts. So that means that's going to flow on to an effect of the recession and a depression, and the whole market's going to collapse. So because of that, emotionally, people are pulling out their money from shares, they're pulling out their money from crypto, but we haven't seen this really get affected in the property market. When you've got most of the debt in the property and housing market, why isn't that getting affected? Well, it's really for two reasons. One, it's not as liquid as crypto and stocks, so we may have a delayed effect, but also people know that property serves a basic human need, which is shelter. So it may not be as affected as the other markets. I just made a video about this and how these asset classes move when it comes to a recession, so definitely go check it out. I'll link one up here. Now, knowing all of these things that are happening, you can understand why there is turbulence in those markets. Now, could we go lower from here? I personally think we will. I think we're just range bound now for Bitcoin. You know, anywhere between $30,000 and $40,000 USD is pretty much where it's going to be. And that means we may see a bleed of altcoins against Bitcoin. Now, could we look back at this moment in say 2 or 3 years and think,
oh, that was the best chance to actually buy crypto?
Yeah, probably. And that's why I continue to dollar cost average in. However, it just makes sense to be mindful and not be naive to the fact that we could enter a bear market, we could completely capitulate and go down and not have those investments recover over the long term. This is why I've said for so long, I don't give financial advice, but the one thing that I do tell people is have a strong strategy. And if that strategy is built on a strong foundation, you're going to do really well long time. I can afford to take some risks when it comes to NFTs, come to crypto, and actually be making a lot of money during this bear market of what crypto looks like, because I have such conviction around the housing market and its traditional finance where it's a bit more stable than my crypto. So as we continue kicking the can down the road, hopefully you enjoy this analysis of what I think is happening in the market, why we're not looking at parabolic growth in any of the next couple of months. So it might be worthwhile diversifying and start planning out what's around the corner. That's all I've been doing for the last couple of months, and now it's being fruitful in the fact that yes, we're making money in the mastermind. We're talking about plenty of opportunities. So just because some markets aren't working, other markets are actually growing. It just means you need to be in the right conversations at the right time. I hope you guys have enjoyed this video, and if you have, smash that like button and subscribe with that beautiful red button. I'll catch you guys in the next one. Thanks, guys.